Good evening, good evening, good evening, everyone. We apologize for the delay. We had welcome. Thank you all for joining us today. Welcome to IminiWealthTV and Happy New Year, Happy Thursday to everyone on the call today. Welcome back to another insightful session at IminiWealthTV. My name is lolaowokoniran. I am the founder and CEO of IminiWealthTV. We are an online financial educational platform and financial services provider for individuals, families, and businesses. Thank you again for joining us today. At this time, we would love to hear from our viewers. Please do well to invite someone if you're on here already. Please share the links. Share the link to this YouTube live to invite a family, a friend, anyone who would need this information that we're about to discuss today on this live video. Thank you again for joining us. Please share on all social media platforms. This is going to be a very insightful session. I am also sharing on my device. So please share and make sure that you tell someone that we are live today on IminiWealthTV. It is Thursday. Happy Thursday to you all. So thank you so much. And just to recognize our viewers as we are getting people joining the call, if you don't mind texting, putting on the comment where you're dialing in from, your name, your city or state in which you're dialing in from. Would really love to hear from you. So please put your comments in the section below. If you can tell us where you're dialing in from, we really appreciate it. Thank you all for joining us today. Thank you. Please leave your comments and questions in the comment section of this video. If you have any questions in the course of this entire video, would love to address them. Before I move on to today's topic, the book for the month of January is New Year, New You by Dr. Frank Ofosu up here. I will leave the link in the bio for you to order your own copy. It's available in Kindle as well as hard copy. So anyone who is joining us on the reading challenge that we have for this year, please go on there and get you a copy as well. We will do a review in the coming weeks on that book, New Year, New You by Dr. Frank Ofosu up here. Again, please do share and invite your friends and family to join us. If it's worth listening to, then it's worth sharing. So please do well to share, and invite a friend, a family, or business partner. And for our viewers online, if you could please type in your name and where you're dialing from, what state. Would love to engage you in today's session. What city or state are you dialing from? Please put that in the comment box. Would love to recognize you on this session today. So please do well to put that on there. Now, I'm just going to give you all a few more minutes to join. So let's give, are we good to go? My guest speakers, thumbs up, please. All right. All right, awesome. So we'll get started on today's session. With me in the studio today, I have two prominent people, well knowledged, well experts, I would say, on the topic of taxes. For today's topic is going to be on navigating taxes in 2024. So whether you're an employee, an employer, or a seasoned entrepreneur or business owner, an investor, or someone with the intention of starting his or her business in the new year, this episode is definitely for you. You do not want to miss it. So please grab your notepads. Again, any questions, any comments, leave them in the section, in the comment section below, and we will do well to address those questions we'll do well to address those questions in the coming throughout the session. So please do well to drop your questions. I'm getting some responses that the link is not working. So I'm gonna share it again on the social media platform. I do apologize for that. We'll get started in a few minutes. Okay. All right. So please use the link I just shared out there to join us. Welcome to our new viewers, our new guests joining us today. We do apologize for the technical issue we had earlier. So thank you for joining us. Like I said earlier, please do well to leave your comments and your questions in the comment section below. And I'd love to hear from you, to our viewers, where you're dialing from. If you don't mind sharing, we'd love to recognize you. Deborah McNeil, thank you, from Loganville, Georgia. Kuznier, if you could please drop in the comment section where you're joining us from, would really appreciate it. Just to appreciate you for joining us today. All our viewers, please drop your questions in the comment section and the city you're dialing in from. Now, we have two guest speakers today joining us on today's episodes, who are tax experts with us today, and they're going to be sharing great insights and addressing our questions on taxes in 2024. With me today, I have Mr. Eric Frimpong, a CPA and the CEO of Frimpong CPA. And we also have Mr. Ernest, Asare-Nkansah, who is an accounting instructor and also the CEO and founder of Shiningstar Tax and Accounting LLC. Thank you both for joining us today. We appreciate you. My apologies. Now, I'm going to go ahead and get started with the questions. But like I did say earlier, if you could please drop your questions in the comment section as we get engaged on today's topic, I'll do very well to mention them to ask those questions. So, Mr. Ernest, Mr. Eric, thank you both for joining us. The first question I have here, but before I go on, would either of you love to welcome our guests today, please?
Okay, let me take it up. Yeah, welcome everyone to this tonight's program about navigating taxes. I know most of you have questions about taxes, and we'll do our best to, answer your questions. When it comes to taxes, I was telling somebody this afternoon that refund is not automatic. We don't file taxes because of refund. We are accounting our income to the government. In there are some benefits you can get. And please, everyone's situation is very, very unique and different. The fact that you made the same income with a co-worker doesn't mean your refund or the result will be the same. Sometimes just a dependent being a day older than the other person's dependent can change the whole thing. So, we are here to open up, and if you have any such questions, I think we can address it. My boss, and for information, Eric is my boss, so if you put the question too much, he will come and bail me out. So, Mr. Eric.
Please ignore the last portion of Mr. Ernest's comment. Welcome, everybody. We hope you will leave here enlightened. Ms. Lola, over to you.
Thank you so much. Thank you. Again, welcome to our viewers, and I'm going to get started right away on the questions. Just to acknowledge a few more people that have joined us. Nana from Brazilton, Nade, have Gabriella. Thank you all for joining us. And again, to our new viewers, just put on your name and where you're dialing in from and post your questions on the comment section as well. Now, to the first question we have here, what key documents should individuals have in order when preparing their taxes? I'll let either of you answer that.
Okay, let me come in so that my boss will always cover my back, I mean, basically, the key documents is W-2 if you're an employee, 1099 if you're a contractor. Then, of course, if you are self-employed, you have your own business, then basically your business's revenues and expenses. Okay. Now, if you have dependents, we need dependent information, name, date of birth, and social security number. Most of the time, if you are a new client, we have to have copies of all this on file. So sometimes you've been with one person for a while. After they got it the first time, they don't ask again. So when the new person asks, it's like they didn't take it the last time. If the person is a paid preparer that IRS recognizes, the tax preparer is supposed to keep a record of that. So when we come and we ask for it, we follow the rules to safeguard the information. So basically your name and the name, address, everything of your dependent. And for small business owners, please, we don't need your receipts. You have to do the work. And let's get this to make the difference. If you're a small business owner, there's difference between accounting and taxes. When it comes to do your taxes, the idea is that your accounting work is ready. Okay, sometimes your business doesn't involve a lot, so the tax preparer will just go ahead and put it together. But if you have a lot of transactions going on, then you need to get your accounting side, basically your revenues and expenses. And this is something, if you don't know how to do it, then you need an accountant to help you put it together. It makes your taxes very easy. Sometimes the tax preparer will tell you, they will do that as an additional work. Yes. But do something. You don't even have to wait till the end of the year. That's why you forget most of the things. Okay, so I believe the questions will come. I won't say much so that we can, but for now, your documents, anything that you need to report on your taxes. If you get any letter, even if you don't understand, that says for tax information, put in your folder and bring it. We'll let you know what we can use so that at least you don't leave anything out. People get some documents. Maybe you did a job somewhere, you left your 200 401k was sent to you. You forgot about it. So you didn't add it. Down the line, IRS will send you a letter to go and work on it. So the moment you get anything that relates to tax, get a folder, put it in from January. When the time comes, arrange them in. Come with it to your tax preparer. Bossman.
The only thing I will add is, if you don't have any document, you cannot file taxes. Yesterday, somebody walked in the office and said, I'm here to file taxes and claim my rebate. And what do you have to file? I don't have anything. I thought they give him money. So he said, I didn't work all year long. So if you do not have any income document, you cannot file taxes, no matter how many dependents you have. You have to earn some income before you can file taxes. That's all I'll add. Mr. Ernest covered everything.
Thank you so much. Thank you. Now, to the next question I have here, what is the deadline for 2024 in terms of filing?
April 15 for individuals, March 15 for S corporation and partnerships, unless you file extension. And one of the myths is, if I file extension, I'll be audited. I always file extension, always, because there is no way I can file my own taxes, so I'm filing yours. So filing extension doesn't mean you'll be audited. That is not true. Extension gives you time to file. And of course, if you are getting a refund, then file on the 29th when the IRS opens, so you can get your refund on time. But for those of us who don't know, and like Mr. Ernest said, if you have not gathered all your information, 6 months automatic extension is free for the IRS. Maybe your tax preparer will charge you to file for you. But other than that, the government automatically gives you 6 months to prepare so you can file. By April 15 for individuals.
Okay, thank you so much. Now, the next question I do have here is talking about, this is for, well, us is everybody. So for someone new to taxes, what are the common mistakes they should avoid during the filing process?
Well, I think when it comes to file the taxes, your tax preparer will be the one to file based on what you bring. So it gets to where if you forgot to bring some document, you forget to provide some additional information that the tax preparer doesn't know, then basically we can't do the magic. That's why I said earlier, anything that you get, even if you're not sure, add it so that you don't leave anything out. Because one of the things you should know is that if you are given a 1099 or a W-2, IRS already has a copy.
Yeah.
So they know the income you made if that is not reported. And like I said, sometimes you just did 2 weeks somewhere, you left and you don't even remember anything about them. When that thing comes later, if you find it, you can do an amendment. But so far as it's reported to IRS will come back to you. So it's not a mistake that you will do whilst you are filing. The only thing is that if you don't include any information, of course, the tax preparer might not know also. But the common one is when people work a week or a month at a place and they forget about it completely. And sometimes you change your address, so you don't get a W-2. So maybe on the side, you can keep records of the places you have worked during the year. Then, if you don't get a W-2 or 1099 from them, then you call to inquire about it. Unless they told you they are not going to give you one, then that one, there's no income being reported to IRS.
Okay.
For the do-it-yourself, one thing you can do to help yourself is to call the IRS. There's something called wage and income document, and it reports every income that you receive during the year. It does not include state information. It's only federal information. That will tell you what anybody reported on you. I do it myself. I do it for myself and my wife. I'll call the IRS, get our wage and income, just in case Miss Lola sent me 1099 that I'm not aware of. But it helps a lot. I do it for new clients. For my existing clients, I know them. I ask them if there is anything weird that happened in the year. But for new clients, I request this wage and income document to be sure that you are not hiding that stock transaction that you traded by yourself.
Nice one there. All right. I have a personal question to follow up on that. Now, in what ways, because I personally don't see any reason to be expecting a refund every year, because it's pretty much like giving IRS my money and there's no interest or earnings on the money. But how can I break even safely without owing the IRS money and at the same time hopefully getting something back, but not putting a chunk of my money with the federal or state government throughout the length of the year, money that I could have used in other investments. Any recommendations there?
Okay, I think my boss said it earlier, some time ago. This is on individual basis. There is no specific way that you can for sure know. Now, the taxes that you pay is based on the income that you make, based on your filing status, or determine how much you should pay. So there's a guideline with the IRS website called the wage estimator, that if you want to do it every quarter, because things, when you go there, it will appear as if you are filing taxes today. It will give you an idea on the income you put in and the taxes you are supposed to pay. Then you compare with what you are paying to see if you are in line. Other than that, you need to adjust your W4. Okay. Now, Miss Lola doesn't want IRS to hold her money, but the best way to start with is to claim zero, irrespective of the number of dependents. Claiming zero means that you are paying the highest tax. My philosophy is that at the end of the day, my income is going to determine the taxes I'm supposed to pay. So it doesn't matter how much was taken. If they take more from me, actually that's what we call refund. The difference between what you are supposed to pay and what you have already paid. And sometimes it hurts, even if you have the money, to go and pay back IRS. So instead of me going to pay IRS for not doing the right calculation, I would prefer IRS to owe me. But if you want to break even like Ms. Lola, the wage estimator will guide you. And this is something you have to do, every quarter you go in then. But sometimes people have had a lot of clients, they have the idea that exempt the first 6 months, then the last 6 months you go and do this, and they will forget, and they will owe. Okay. And like I said, even if I have the money to pay IRS, it's like pulling the hair in your nose.
Yeah,
I will not do that. But like I said, it's individual. Some people too think that $20 additional that will come to me, I might not even see it. So why not live with IRS? Put it together and get something bulk. So it's all in individual basis. But once again, the wage estimator, if you are the one who wants to see break even with IRS, that's what can help you. My boss told me it is 95% accurate. So at least you are in a safe haven. And I think he will comment on it. He doesn't want me to call him my boss, but whether I like it or not,
he's the boss.
He's the boss.
Oh, thank you so much. Mr. Eric, any add-on?
I am not the boss, but like Mr. Ernest said, if you can possibly, the only thing I'll add is avoid exemption. Avoid going exempt. It will not help you. Like he said, majority of clients forget, and then they realize they owe more than they had anticipated. So if you can, avoid going exempt.
Thank you. Thank you so much. We have a couple of questions coming in on the chat. Nadia is asking, if you are in the midst of setting up your business, what are some tips or things you can do now to be ready for when you launch the business?
Eric, want to take it, or I should go ahead?
For tax purposes, if you are, what I tell startups is, don't worry about the first year, because even the IRS gives you a break the first year, because most of us, the first year is a loss. So we need the money, unless you have some big inheritance or you have some big venture capitalist who is supporting you. Most of us are probably even using credit cards. So we really need as much money as we can for the first few years. So I tell clients, don't get caught up with taxes for the first few years. At least give yourself 1 year. There is no way, unless you started out with big sales and income, that in that case, let your tax professional be your friend. When you start and you see you are really earning a lot of income, That's when you call. But for majority of us, we actually need the cash flow. So I won't worry about taxes the first year.
Okay. Thank you.
But then I think the question before you launch, the type of business you register is very important. Okay. We have the sole proprietor, we have the partnership, then the corporation. So depending on what you are looking into, because the tax implications are different. Okay. If you register a corporation, whether there's an activity or not, you have to file taxes, zero. If you don't, the penalties are almost $200 a month. They go by month. And IRS interest compounds daily.
Yes.
Okay, so the option of a sole proprietorship, a partnership, and a corporation, you need to sit down with somebody to understand what the tax implication is. Now, we talk about LLC. LLC is the safeguard you add to your business, so that if you're self-employed, a sole proprietor, or 2 or 3 people forming a partnership, then your personal asset will not become the subject for settlement. So you have to make sure you cover yourself with that limited liability. People don't pay attention to it. They'll go and register sole proprietor. All that it means is that you are everything. The business is you. If there are losses and the business asset cannot take care of it, your personal asset will be affected. But at least the state gives you the option. The day you are registering your business, choose an LLC. If it's a partnership, do the LLP, limited liability partnership, to cover yourself. Okay. Now, there's a question as to, and I hear people on YouTube, Facebook making noise, pay yourself, pay yourself, pay yourself, pay yourself. If you are a single member LLC, if you're a single member sole proprietor, if you're a sole proprietor, legally, you cannot pay yourself a W-2. Neither can you even pay yourself a 1099. People don't know this. Okay, IRS has a lot to do, so they don't have time to look into all this. Only one thing triggers and they'll go back. As a sole owner of a business, any money you take out of your business, we call it a withdrawal. Okay, yeah, you take money. The other thing is that keep records. People miss things. Okay, determine that every week, every 2 weeks, this is how much I'll take as my withdrawal. You can't pay yourself W-2. Now, it gets to a point where you want to save yourself from self-employment tax. If an LLC or sole proprietor that has to file the Schedule C, it comes with a self-employment tax. But then you have a way to go around it where you have to opt to be taxed as an S corp. Okay, then that way you kind of shift from self-employment tax to your personal taxes and the personal tax rate. So that is how you can go about it. But these are things that you have to consult the professionals. If you are concerned about how to the form of business to form, to know the benefits in each one of them. I think for now, yeah, I'll put it that way.
Thank you. Another question here on the chat. Again, to our viewers joining us, please do well to post your questions on the chat. We'll do very well to address them as they come in. And if you don't mind introducing yourself, just giving us a shout out, would love to acknowledge your presence here. And please share this link with as many people as possible. Everyone needs to get informed about taxes this year and the necessary things we all need to get ready for. Again, thank you so much to our guest speakers today. We appreciate you both. Benjamin here is the Benz. He's asking, what is the limit number of children you can claim and get child tax credit for? And what age limit?
Now, let me start and my boss will top it up.
Okay.
Now, if you have dependents, you claim them. If you don't have them, you can't claim them. Okay. I know where you are coming from. What happened is that the benefit you get from dependents is not proportionate. So let's say one child gives you 2,000 based on that income. It doesn't mean that the 2 children will give you 4,000. And that's the ad people put out there confusing people. Okay, it's not proportionate. If one child gives you 2,000, the second child may give you 1,500, the third child may give you 1,000. Then it goes that way. Okay, yeah, sometimes they tell you four is the max. I don't think there's a max, But then the more you have, it doesn't mean it's proportionate. The benefit is proportionate. That's what I can say.
Mr. Eric, there you go.
There are two main refundable credits, and I say refundable because there are some credit that are non-refundable. And like Mr. Ernest said, that is where you see with this tax season, you will see 5,000 one child, 6,000 one child. They've probably included some non-refundable credits. The biggest non-refundable credit is dependent child care credit. It is not refundable credits. Non-refundable means if you don't have any tax liability, you forfeited that credit. If you have tax liability, they go to pay your tax liability. The refundable credits, they come to you whether you owe or you don't owe. Whether the biggest one is earned income credits, which I'm sure everybody knows, and that's where the biggest refund comes from. For that earned income credits, the maximum number of dependents is 3, and it's up to age limit 65, so you can claim your grandmother. However, between the ages of 18 and 25, the child has to be in college in order for you to be able to get the earned income credit. And then there is additional child tax credits or child tax credits is the same. That is 2,000 per child, but that has no limit. But that, like Mr. Ernest said, depends on, it's not proportionate. It depends on strictly based on your income. So you may have 10 on there and it won't make any difference on your refund. But the biggest one that would make a difference is the earned income credit, and the maximum is 3, but watch the age.
Okay. But they do have to have they have to be citizens, have a social security, right?
Yes.
Yeah,
They do for the earned
residents.
income credits, yes. For the child tax credits, no.
Oh, okay. So in terms of grandma now, if I want to claim grandma, does she have to have social security?
Exactly.
Oh, yes.
For the earned income, anybody who you put on there for the earned income credit has to have a social security. But for the child tax credits and the additional child tax credits, I-10 will be fine. But they have to have something, I-10 or the social security. Nothing, you won't qualify for anything.
Got it. Okay. Thank you.
Let me add something also about this credit. The noise that people make, you can get this. Sometimes people think credit means somebody's paying you money. I have clients calling me that, hey, if you're a business person, when you buy a car, you can get a credit. You can get a credit. It's true. It doesn't mean somebody's going to pay the car to you. What that means is that if you made $50,000 and all this credit is about 10,000, you deduct the 10,000 from the 50,000 and pay tax on 40,000. It doesn't mean somebody's going to pay you the 10,000. Okay? People get it wrong. Oh yeah, I can claim this. Yes, it helps you to reduce your taxable income or your tax liability. That's the essence of credit. Credit is not money that is given to you. Okay. Now the only thing that will come to you is the earned income credit, which you should have that income. And even that there's a limit. If your income exceeds certain amount, you don't get it. Okay. Yeah, the IRS always has a table for that. So a credit doesn't mean the money will be paid to you. The credit is to help you reduce either your taxable income, the deductions, or actually deduction, your taxable income or your tax liability. Then some of them are refundable. Some of them are non-refundable. So if you have the credit that is non-refundable and you don't have to pay tax, you still don't get it. But if you're the one that is refundable and a portion pays the tax and the remaining one comes to you, that's the only time you get it. But if there's nothing, nobody will just give you that money as refund.
Got it. Thank you so much. Okay. Next question here. How often should I contact my tax preparer in a year?
This question, unless you have signed up to pay, what do you call it, money every month to the person, because it's a service. You know, outside the tax period that you file your taxes, to me, anything else is consulting. You know, so, and of course, it depends on the rapport you have with your tax preparer. Some of these you can just call and get a question. But if you are contacting your tax preparer in regards to maybe how to save on your taxes, like we discussed earlier, then maybe, you know, we'll be recommending to you use the wage estimator to determine that. But I mean, if I'm not a tax preparer, all I need to come to you when I'm ready to file my taxes, or if I have a question. But, you know, like I said, my authority is right here. You can also add it.
Wouldn't you say that, sorry, before Mr. Eric comes in, wouldn't you say that if I'm about to make any huge financial tax-related investments will be one good way, a good time to also contact my tax preparer?
Okay, so that one, there's going to be a huge change from what your tax preparer knows.
Yes.
Yeah, and that one you need to contact him and see how you can save in taxes. For example, if you got a big raise, you know, at your job or a new job, double, triple your income, you want to save, yep, your tax preparer can maybe even tell you that contribute the max into your 401k because you save taxes out there. So yes, if there's a huge change like that, you can contact your tax preparer or a tax professional, you know.
Or as a business owner, you know, if I, you know, for instance, I want to buy a new building to transition office or land, you know, as a business owner, wouldn't you feel that those are situations or circumstances that I need to carry my tax person along with what's going on?
It is any significant change, you know, I mean, you don't lose anything, so that at least if there's any way of saving in taxes, you know, because like I said, you just said it, but whatever comes up will be very unique for everybody. Yes. So you contact your tax advisor. After tax season, I think we call ourselves tax advisors. So,
yes.
Just kidding. Yep.
Yeah. Yes. Mr. Eric, sorry. Any add-on to that question?
I think like Mr. Ernest said, just remember that anything after your tax is completed is consulting. But one thing I don't know who is